Yeah, now the time is 7:11. I waited for about 10 minutes. We will start the session now. Now, from today onward, I'll be conducting the lectures next couple of days. Yeah. Mr. Saman will take his balance 2 lectures on 2nd of October and the 7th of October. October first 2 days, Mr. Saman will take over the lectures because I'll be out of the country. All the other days, I will conduct the lectures. Right. I'll share my document. I think this document is visible to everybody. This morning I shared this document with you all. Through CMA, they shared this document. Now, in my case, I didn't put this into a PowerPoint presentation because I thought that rather than preparing a PowerPoint presentation, it is better for me to give a detailed note. Then even on a subsequent date, you can refer this note for your further studies and to refer your acts and all. That is the very reason why I didn't want to put this into a PowerPoint document and make it more summarized. I didn't want to do that because this comprehensive note, but I will cover the almost entire note. Then I think this document, it will contain about 37, 38 pages. Out of these things, I think I shared about 20 pages with you all. First, a couple of pages, I think almost about 20 pages I shared with you all. The balance part, that is to cover the first 4 days. Then for the balance part, I will share the complete note after adding the balance part. Right. Now, as we discussed in the introduction day, this is a practical application. We are trying to learn how to apply the income tax. That is the very reason why we call it as practical application of income tax. We are trying our best, the lecture panel, trying our best to share our knowledge, the theory knowledge as well as the practical knowledge for your application in practical scenarios. That is our expectation. As a result, as I have mentioned at the initial day, we encourage everybody to ask more and more practical questions. If you have any question connected with tax, you can ask those questions. Some of these questions we may not be in a position to answer immediately. That's okay. If you have a tax question, please ask, then we will note down those things. If you have the answer immediately, we will answer. Otherwise, on a subsequent date, we can answer. Right. Now, in my note, as I said, this will contain about 37, 38 pages. Right. I have given a small summary index type of a thing for your easy reference. The introduction, I'll be doing Mr. Saman also did the introduction to tax, but I'll also take little time and do an introduction to income tax, right? It is under introduction, imposition, interpretations, residency principles, and tax computation format, and the qualifying payments and relief will be covering those places, those areas. We'll be covering those area under introduction. Then thereafter, I'll move to the sources of income. I know Mr. Saman did this part, but I'll repeat it by taking a little time. Then sources of income also, Mr. Saman did his, in his lecture, he covered that during last 3 days, but I'll also do that. I have given here brief explanation, detail or everything like that, right? Then under that, we will talk about 4 sources of assessable income. Then thereafter, basis of calculation, the income tax income. Then we will do brief introduction of employment income, business income, and the investment income. Then thereafter, I'll do a detailed explanation of the other income. Then Mr. Saman has already, he's covering the employment income. Employment income is his area. Therefore, I'll not be covering the employment income in detail. Then thereafter, I will move to investment income and the business income in detail. The covering of investment income and the business income in detail. Then after that, we'll move to income tax exemptions, then other concessions granted with relate to income tax, then computation of taxable income with breakup of individual, partnership and companies, then tax rates applicable to different taxpayers, then withholding tax, but withholding tax we'll be doing in brief. Then the income tax administration also will be covering in brief. Why this administration in brief? Because when we take our Inland Revenue Act, almost 50% of the content is administration related. Therefore, if we are to cover the entire administration in length, that's a separate course. It will take another 20 more than 20 hours requirement is there. Therefore, we have not included locked on tax administration, but as we need to know tax administration part, I'll be covering that part also in brief. Right. In this note, this now, as you know, we are at present, we are using the Inland Revenue Act number 24 of 2017. There are 4 amendments to this act up to now. Act number 10, Amendment Act number 10 of 2021, 45 of 2022, 4 of 2023, and 2 of 2025. Those are the amendments up to now. And in addition to these things, we are awaiting for another amendment. We are awaiting for another amendment. We were expecting that amendment about 2 months back, but 2-3 months back, at least by last May, but that didn't work out. Up to now, we are waiting for that amendment. Right. Now, as there are 4 amendments, I have included those amended items in different colors, in 4 colors. The original one, basically in the black color, then amendments, for amendments, I use 4 colors. The 2021 amendment, red color, 22 amendment, purple color, then 2023 amendment, green color, and the latest amendment in light blue color. Then it is easy for you to understand or get it connected to the X. Now, as I mentioned in the initial day also, anybody who is learning income tax, any law, should have a copy of that legislation with you. Therefore, it is very essential for you to have a Inland Revenue Act alone with amendments. Luckily, Ms. Dhammika Gunathilaka, retired senior officer of the IRD, volunteered to do a consolidation of these amendments into the main act and publish it. This is not an official document, but it is very much helpful to all of us, tax practitioners as well as for taxpayers. Therefore, you all can buy the original act and the separate amendments from the government publishers department. In addition to that, you all can get downloaded the consolidated act, which is prepared by Ms. Dhammika Gunathilaka. Then you can use that, right? Then, now we'll see, now when we take any act, any tax related act, the most important thing is the charging section, because we know tax is a charge. Tax is a charge. Government needs more and more money, right? And as a result, government needs more money. As a result, they are charging taxes. This tax is not a new thing to Sri Lanka. Even during our king's time, we had various type of taxes. At that time, the government was charging, kings were charging these taxes in kind, not in money. At that time, we didn't have money. They were charging with, sometimes with harvest of their agriculture, right? Various ways they were charging tax. But as a result of starting using the thing called transaction currency, called transaction mode, called money, now we are transacting all these things in money form. Right? Now, tax is a charge. Then, the most important thing in the tax law is the charging section. The charging section, right? Now we'll see in most of the tax laws in Sri Lanka, the charging section is section 2. Section 2. Similarly, the Inland Revenue Act, Value Added Tax Act, and SSCL Act, those three are the main acts administered by the Commissioner General. In addition to that, Stamp Duty Special Provision Act, all these things, the charging section, they have numbered as number 2. In SSCL Act, of course, it is combined with number 3. SSCL Act, the charging sections are number 2 as well as number 3. It's a combined situation. As we are learning income tax, our charging section in income tax is the section 2. Now, I know Mr. Saman also explained it, but we will cover it again. Now, the charging section 2 says, income tax shall be payable for each year of assessment by a person who has taxable income or a person who receives a final withholding payment during the year. Now, in this sentence, I have highlighted most of the important points. What tax? Now, this charging section answers to several questions. It answers to almost about 5-6 questions. What tax? The income tax. The first thing, what tax? Income tax. Shall be payable for what period? What period? each year of assessment. It is liable for each year of assessment. Then by whom? By a person. By a person. Then what's the speciality of this person? Who has a taxable income? A person who has a taxable income. But there's a continuation. Or a person who receives a final withholding payment during the year. Right. Now, by reading this, it explains what tax, for what period, then by whom, and the speciality of this person, either a person having taxable income or a person who is receiving a payment which is subjected to final withholding tax. Right. It answered to several questions like that. Right. Then, as per that, how to calculate this tax? The tax is equivalent to taxable income into rate or rates. Taxable income into rate or rates. We have to apply the tax rate or rates on the taxable income. Once we do this, we get an amount, that is the tax amount, because we multiply the taxable income by the tax rate. Then we get the gross tax amount. Once we get the gross tax amount, from gross tax amount, we can deduct any tax credit, permitted tax credits. Now, if there are any tax credit, we can deduct those tax credit. This tax credit may be Sri Lankan tax credit or overseas tax credit. Either case, if it is permitted, we get. Now, in this charging section, we said there are two parts. The part B, it is somebody who is receiving payment which is subjected to final withholding tax. Therefore, on that, how to calculate, how they have already calculated tax. That is also given here. Final withholding payment into rates. Final withholding payment in any payment which is to be subjected to final withholding tax. Any payment which is to be subjected to any final withholding tax. On that income, the person who is making the payment should apply the relevant tax rate or rates and get the amount. Right. It is very clear. In the section 2, it explains all these things. Then, where these tax rates are given? These tax rates are given in the first schedule to the Inland Revenue Act. First schedule to the Inland Revenue Act. Right. Now, I have given by introducing the para B, person who is receiving a payment. The language, of course, there are issues in this current act. The real meaning is a person who is receiving a payment subjected to final withholding tax. Right. That means withholding tax also covered with section 2 in this law. Now, as I mentioned, this section answered to several questions. What tax? Who is liable? How frequently the tax to be paid? On what the tax to be computed? And on what rates? And what are the allowable deduction, that is the credit? It answered all these things. Then we should know a resident person shall pay the income tax on the world income. A resident person shall pay the income tax on the world income, while a non-resident person shall pay the income tax on the income arises in or from Sri Lanka. Right. Now, a resident person shall pay income tax on the world income. Now, when we take a resident person like myself, I had to pay income tax on the Sri Lanka income as well as in overseas income. Whereas a non-resident person, he should pay income tax only on the income arises in or from Sri Lanka, not on the overseas income. That is covered with Section 4. Now, as some of these income, now suppose I have some income generated in Singapore. I am a resident Sri Lanka. As a result, if I have any income generated in Singapore, I have to pay income tax on my Sri Lankan income as well as on my Singapore income. Now, this Singapore income may have already taxed in Singapore. Now, ultimately, on the same income, it is subject to tax in two countries, in the sourcing country as well as resident country. Generally, in most of the countries, they apply this sourcing principle. First, you have to pay income tax in the sourced country. Then, again, you have to pay income tax in the resident country. Ultimately, same income may be taxing in 2-3 times. How to overcome this? Now, by realizing this effect, ultimately, at that time, governments introduced some double tax treaties, double tax agreements. Now, when we are dealing with some other countries regularly, we go and negotiate with them and sign a double tax agreement. Likewise, at present, Sri Lanka is having 44 double tax agreements. That means there are double tax agreements with 44 countries. With the countries with which we regularly transact. You go and sign agreements like that. Now, as per that agreement, what's happening generally in the sourcing country, we have to pay tax. Once we pay tax in the sourcing country, we are not we give a credit for that tax amount, tax applicable on that income in the other resident country. That is how it is operating, right? We have 44 agreements in 44 countries. Now, up to now, are there any questions? Are there any questions?
So that tax credit is given only for the same amount, or it can be different amount depending on the rates applicable in the other country.
Yeah, can be different amount. Suppose, now if I'll take Singapore, now Sri Lanka is one of the highest tax charging country in the Asia. Right? Sri Lanka is a very one of the highest tax charging country in Asia. Now, if you take Singapore, the corporate tax rate is 17% only. The corporate tax rate is 17%. Whereas in Sri Lanka, average, the standard rate is 30%. In Singapore, it is only 17%. Now, you know, very recently, India reduced their income taxes materially. And they reduced their certain duties also. And they, to teach a lesson to America, they reduce their various taxes. Now, if you take a country like the old countries, Middle East countries, most of the Middle East countries, no income tax at all. Now, very recently, Abu Dhabi, I think, they introduced income tax on individuals. For the first time in Middle East, they introduced income tax on individuals. But that is also their expectation is to cover only about 1% of the population. That means even for that, they have given a huge allowance threshold. That is how they introduce. And any other country in the Middle East, no income tax on individuals. In Dubai, there's income tax on corporate bodies. That is also with huge allowance. In Dubai, if a corporate body's income is over and above 375,000 dirhams, 375,000 dirhams, only they have to AU, then only they have to pay income tax, corporate bodies. Individuals, no tax at all, no income tax at all. The VAT is there. Even in Singapore, the VAT is there. I think Singapore, the VAT rate is 9% or something. Likewise, VAT is there. Now, suppose it is America. If I have some income in America, the actual income tax rate may be 42% or greater than that. Even in England, it may be about 42, 45%. Now, suppose I have some income which is subjected to 45% in that country. I am not getting the whole credit in Sri Lanka. Because if government gives the whole credit in Sri Lanka, I'm getting additional benefit on Sri Lanka income also. Therefore, what's happening, I have to include that overseas income as a taxable income in Sri Lanka. The income, adding the income into my assessable income. And thereafter, apply the normal tax rates of Sri Lanka and arrive the tax amount. Now, when we arrive the tax amount, we consider world income and arrive the tax amount. After arriving the tax amount, we calculate the tax attributable to overseas income in Sri Lanka. Now, suppose I'm a heavy taxpayer, my tax attributable to the overseas income is 36%, we'll say. My effective tax on the overseas income in Sri Lanka is 36%. I have paid in America 45%, we'll say. I paid 45%. Here the effective tax will say 36%. Normally it won't come to 36. It has to be little lesser than 36 because the personal allowance and slab rates are also there. Right. Suppose Sri Lanka effective tax rate is 35%. America 45%. Then I'll be getting the American tax amount, divide by 45, multiply by 35, and arrive the effective tax on the American income in Sri Lanka. Only that amount is allowable in Sri Lanka. Otherwise, Sri Lanka government is losing. No? The full amount won't be there. Suppose I have my income in a country like Dubai. It is not taxed in Dubai. Therefore, no credit at all. Suppose my income is in a country like Singapore. The individual tax rate I can't remember. We'll assume the individual tax rate is only 25% in Singapore. Then my effective tax in Sri Lanka may be higher than that. If it is higher than that, I'll be getting the full credit of that 25. Okay? Basically, you are getting the effective tax tax computed on that overseas income in Sri Lanka. Up to that amount. That means there are two amounts. One is the actual tax, what you paid there. The second thing, the effective tax on that income in Sri Lanka. Out of these two, whatever the lesser amount, you are eligible to claim. Okay, lesser amount. I think I answered your question. Are there any other questions? Right. I have given a small note in shading in green color. It's a positive thing for us, shaded in green color. I have mentioned it is to be noted that there are a lot of drafting errors or loopholes in our current Inland Revenue Act. Sorry to tell this, sorry to mention this. In our income tax law, the current law, there are so many weaknesses, drafting errors, and loopholes. Right? Why? One thing is that this is a law drafted by IMF to introduce as the first time taxing of another country called Ghana. They prepared it for Ghana. And Ghana, this is the first time they introduce income tax. And therefore, when they drafted, they did. I think they have missed so many things. And the other thing may be that not having capable individuals to draft these laws in Sri Lanka. That is also there. Right. Anyway, there are drafting errors and loopholes. While I'm lecturing, I will highlight some of these things. Whenever it comes, I'll highlight. Now, when there are drafting errors or the loopholes in our tax law, that's good for the tax consultants. I'm so happy with these things. Why? Then we can get the maximum benefit out of that. Because the world accepted norm is that any benefit out of the errors in the legislation, if we can get any benefit as a result of these loopholes in the legislation or errors in the legislation, the world accepted thing is that benefits should go to the taxpayers, and hence a tax professional. Now that means when we are learning tax, when we are becoming a tax professional, you are giving services either to your employer or to some other client. If you are a proper, capable tax consultant, you should be in a position to get the maximum benefit out of these errors in the law. To give the maximum benefit to the client or to your employer. That's your duty. It is not illegal. It is 100% legal. Right? Therefore, after learning, after becoming thorough in tax law, don't hesitate to get the benefit out of doubt of the law. Benefit out of doubt of the law. That when there's a doubt, try your best to get the benefit. Right? Therefore, benefit out of doubt. I'll change it the word to doubt, errors, loopholes. Try your best to get the benefit out of the doubt of the law. If there's a benefit, don't hesitate, you enjoy that. But only thing even I says that you better take, you have to think about the cost of fighting also. You have to think about the cost of fighting with the department also. Because at department level, you can fight against the department. Ultimately, you might end up with losing the situation. Then you have to go to next steps. Tax Appeal Commission and thereafter appeal courts. These two stages is costly affair. Generally nowadays, to appeal to the Tax Appeal Commission, the cost may be about closer to 1 million rupees per case. Then when we go to the courts, the cost may be per case, the cost may be around 2 million to 2.5 million. That means altogether it comes to about 3.5 million. It's a material amount. Suppose the tax amount is only 5 lakhs, then you have to think whether it is worthwhile for you to fight or just give up by paying tax, which is wrong tax. But you have to think about rupee and cents also, right? In my case, when I'm advising my clients on getting this benefit out of the doubt of the law, always I explain them the cost of fighting, and after explaining, I ask them to take the decision. Otherwise, it is not fair, right? A tax professional need to be with an analytical mind. You have to learn to handle a case in an analytical mind. The case and analyzing the law. You have to analyze the case as well as you have to analyze the law and match these two together for you to get the maximum benefit out of the doubt of the law, especially in the interpretation. Now, my specialty always, I try my best to defray my professional service by interpreting the terms in the tax laws. Now, no legislator can interpret all terms in the tax law. As a result, lot of terms are there in the tax law which is not either interpreted or even interpreted, not properly interpreted. Then it is up to you to get it interpreted the way you want in a logical way to get the maximum benefit to your employer or yourself, your employer, your client. Therefore, please try your best to learn to interpret the words in a logical way to get the maximum benefit. Now, as I mentioned this, very recently I faced this year. Earlier also I faced the same things like that, agriculture related. So many years back under 2006 Act, I was fighting alone with among so many tax professionals, I was fighting with the IRT alone of defining what is agricultural undertaking. Sorry to mention that I didn't get support from any other professional to do this. But by fighting alone, at the end, I achieved what I wanted. I had about 32 cases. Some of those things went up to the Tax Appeal Commission. Then almost about 8 cases went to the courts level. Out of these 8 cases, 1 case is belonging to 100% government-owned company. Government didn't know that. I was fighting on that. But that company's 100% shares were owned by the treasury. But we went to the courts, and at the courts level, we managed to win these cases in our favor. Now, likewise, now even recently, now at present I am fighting with the department whether an egg is a manufactured product or an agricultural produce. Unfortunately, Inland Revenue Department says that it is a manufactured product. I can't understand who is manufacturing, but they say it's manufactured product. Not only the Inland Revenue Department, but also Deputy Finance Minister of Sri Lanka. We had 2 ministers. One minister of Sri Lanka was interpreting egg is a manufactured product. Both are academically qualified people, PhD people, but that is how they define. Ministry level also they define egg is also a manufactured product. But I am fighting with the IRD that it is not a manufactured product. It is an agricultural produce, and hence I'm fighting that no SSCL liability, and also for VAT I am fighting. I was fighting. Now, of course, at last they realized that they are in a very bad situation. Without admitting that they are in a bad wicket, very recently they changed the VAT law also. Now that's the situation. Our people are not willing to accept that they are wrong. Nobody is willing. Without accepting that they are wrong, they amended the VAT law. That is how it's happening. Therefore, why I mentioned that, always when you are learning tax, please try your best to interpret the words which are not properly interpreted to get the maximum benefit to your side. Right? Then only you will become a capable professional. Therefore, whenever I'm lecturing also, if you have any questions, please ask these questions. Then we can discuss. Right. Now, in this in the charging section, there are a couple of words. Those words are interpreted. Some of these interpretations are very good. Comprehensive interpretations are there. Now, year of assessment, as all of us know, year of assessment means 12 months period, commencing from 1st of April of a year and ending by 31st March of the immediate subsequent year, which is defined in section 20. Then, now most of these definitions are given in the common definition section, that is section 195 of the Inland Revenue Act. In the VAT law, it is in section 83. Likewise, the definitions are there, common definitions. In the Inland Revenue Act, section 195 defines the term person, because we know a person is liable. Now, in that definition, it says a person means an individual and an entity. Individual or an entity. Individual or an entity. Then the word entity is also defined again in section 195 to say entity means company, partnership, or a trust. Ultimately, when we combine these two definitions, a person includes an individual, company, partnership, or trust. There are 4 types of people there in the word person: individual, company, partnership, or trust. Right. Then partnership means, now the term partnership is also defined in section 195. It says partnership means an association. Means an association of 2 or more individuals. It's an association of 2 or more individuals. Or corporations. Corporations. Carrying on business jointly. Carrying on business jointly. Now, when we take the first part, of course, even a couple, a boyfriend and a girlfriend, covers with 2 or more, 2 individuals, right? But that couple is not a partnership. Why? Their relationship is not for a business. Their relationship is not for a business. Now, what is the specialty of a business? Jointly for the purpose of making profit. Business means ultimate result is a profit. Therefore, if the ultimate result is not a profit of a business, it is not a partnership under the Inland Revenue Act. Irrespective of whether the association is recorded in writing or not. A partnership need not to be in writing. Right? That is not mandatory. Written requirement is not there. Right? Therefore, all general partnerships won't cover as a partnership under the Inland Revenue Act. This business aim has to be there. Then next, company. Company means a corporation, unincorporated association, or other body of person. Then it says, because the legislator was not sure whether he was capable enough to define it properly. That is why they say include something. They give some examples also because the legislator was not confident enough. And legislator himself realized that he was not confident. Then they go and include this type of things into the interpretation. Means corporation, unincorporated association or body of person, that is clear. Then he was not sure whether with this we will understand it. Therefore, he is trying to give some examples. Includes a friendly society, building society, pension fund, provident fund, retirement fund, superannuation fund, or similar fund or society, and a government excluding the Sri Lankan government, a political subdivision of a government, or public international organization. But excludes a partnership or trust. Why? Partnerships and trust are separately identified here. Separately identified as persons. Therefore, it is to be excluded. Correctly, legislator has excluded it. Then, still the legislator was not sure whether he has managed to give a proper definition. Therefore, he has gone another step. It says, the following shall be deemed to be a company. Another explanation. What is a partnership having more than 20 limited liability partners and a unit trust or mutual fund to which section 59 applies. Now there's a section 59. It is, we will learn that separately certain unit trust covers with section 59. Those things they exclude, also they included into the term company. Then trust means an arrangement under which a trustee holds assets. Trust means an arrangement under which a trustee holds assets. A trustee holds assets. Now that means for general usage, we can have trusts without assets. But for the purpose of income tax law, under the income tax law, to be a trust, that trust should have assets. Otherwise, that is not a trust under the Inland Revenue Act. The subject matter has to be an asset or assets. When we say asset or assets, it may be current asset or non-current asset, land, building and all, or even share investment or bank deposits. Those are also assets. Then body means a company, partnership, trust or other body of person, whether formed in Sri Lanka or elsewhere. Charitable institution means the trustee or trustees of a trust or corporation or an unincorporated body of person established for a charitable purpose only. The most important thing is charitable purpose only, or engage solely in carrying out a charitable purpose. Now, this is very important. I know a lot of people, they have misunderstood. They have not given the weightage for these words, charitable purpose only and solely in carrying out the charitable purpose. If it is not only or solely not carrying out, then that won't consider as a charitable institution. Then the charitable purpose is also defined in section 195. It covers like this. Charitable purpose means a purpose for which, for the benefit of the public, So wide coverage means a purpose for the benefit of the public. That's a wide coverage. Or any section of the public. Any section of the public. In or outside Sri Lanka. Any country, no problem. Of any of the following categories. Now, legislator was not sure whether we can understand with this. Therefore, he has added of any of the following categories. Now we'll see these further explanation categories. The relief of poverty. Relief of poverty. Then the advancement of education or knowledge other than by any institution and established for business purposes or by any institution established under the Companies Act. The advancement of education or knowledge. Next, activities for the protection of environment or eco-friendly activities. Next, the advancement of religion or maintenance of religious rights and practices of the administration or place of worship. Now, the legislator has realized there are 4 areas specifically to cover: poverty, education and knowledge, then environment, then religion. Now, he covered these 4. In addition to that, now he was not sure whether he covered sufficiently. Therefore, again, he included this last item. Any other purpose beneficial to the community. Again, go back to this. Any other purpose beneficial to community, not falling within any of the above categories. Ultimately, beneficial to community mean the first thing, the main item. Purpose of the benefit to the public. This public community. That means these are loop errors in the law. What he could have to do is to limit this here, benefit to the public or section of the public, and includes the following among others. He could have to mention even these 4 items are also included. Again, he has listed 4 and again says common. Anyway, non-governmental NGO is also defined. I have not given the definition here. Then how to, as all of us know, how to calculate income tax. It is well addressed in the Inland Revenue Act in the section 3. It says taxable income is equivalent to the taxable income is equivalent to the assessable income less 2 items, qualifying payments and reliefs. Assessable income less qualifying payments and relief as applicable under section 52 read along with 5th schedule. But when we read this section 52 and the 5th schedule, we know these qualifying payments are generally common for all persons, all taxpayers. Generally, the qualifying payments are common. There are some specific things, but relief is meant only for individuals. Relief, the word relief is not available for anybody other than individual. Right. Then assessable income. It says assessable income plus these things, then only we are getting taxable income. What is assessable income? That is explained in section 4. The term assessable income is explained in section 4. It says assessable income is equivalent to income from employment. That means accessible income from employment, accessible income from business, accessible income from investment, accessible income from other sources. Now, there are 4 sources they have identified. But in this, see, whenever the legislator is not comfortable, not sure whether he included everything, they use the word other. This term other is very much common in most of the tax laws in the world. That means 4 sources are there: employment, business, investment, other. Nobody knows what is other. Anything which is not included into these specifically identified 3 items is the others. Note the accessible income from each source to be computed after deducting the exempt income, if any. If there are any exempt income, you are supposed to deduct those exempt income from each accessible income. In addition to this, if there are any losses brought forward, permitted losses, you have to deduct the permitted losses also. Right. Are there any questions up to now? Please ask questions. Otherwise, it's a boring thing because we want to make it more practical. Therefore, please ask more and more questions. Yeah. Are there any questions?
So far, so good.
Okay. Good. Yeah. We'll continue. Yeah. In future, I hope that you all will come with a lot of questions. What we need is mainly the practical question. With your practical questions, even the resource person, we being the resource persons, also get advance our knowledge. Because every day we are also learning. Right. We'll move forward. Residency for taxation. This residency for taxation is important, as I mentioned, because resident people are supposed to pay tax on the world income, whereas non-resident people persons are to pay tax only on the income generated in or from Sri Lanka. Now we know four types of persons identified under the Inland Revenue Act. As a result, we will see the residency principle for each of these categories. Individuals. There are four conditions. Out of these four conditions, first two are the most important things. First two are the common. Individual resides in Sri Lanka. The first thing, the word is resides in Sri Lanka. Second thing, if present in Sri Lanka. There's a difference between resides and present. Resides mean, now I says my permanent residency is in Sri Lanka. Now most of our senior citizens, nowadays children are in abroad. Right. A lot of our the senior citizens, children may be in abroad. Right. When they are in abroad, when we pass more than 60 years of age, most of our senior citizens, their practice is that they used to go overseas and stay with their children for a couple of months, then they come back to Sri Lanka. But even they are in abroad, anybody, they says, my permanent residency is in Sri Lanka. Right? That is the permanent residency idea is covered with this resides in Sri Lanka. It is not physical appearance. The second condition is if present, that is the physically being in Sri Lanka. In Sri Lanka during the year and the aggregate period greater than 183 days in any 12 months period that commences or ends during the year. Now, the second one, application is not so easy. Now, in my case, I'm a Sri Lankan resident. I regularly go abroad, but I stay only a short time period and come back. Right? Now, in my case, my permanent residency first condition is fulfilled, Sri Lanka. But second condition also I have to look into. Because now ultimately with all these things, the conjunction, therefore, now these are interconnected. Right. Now, now suppose I go abroad. Then from each day I leave the country, each day I'm a resident, I live abroad, I leave the country. Then from each day of leaving Sri Lanka, suppose I leave today, 9th September, 9th September. From today, I count 365 days forward. That is 8th September 2026. Then I wait some time and see during this 1 year, starting from today, whether I have been in Sri Lanka for more than 183 days or not. Maybe in different interviews, in the intervals, no problem. Right. Then during that next 1 year, if it happens me to be out of Sri Lanka more than 183 days, I'll be a non-resident from today, because it says period that commences or ends during the year. The word commences is applicable for people like us. For a person who is resident to become a non-resident. Now I'm a person, a resident. Now I'm a resident. To become a non-resident, I have to apply this word commences. Then I left Sri Lanka today. During next 1 year, I was out of Sri Lanka for more than 183 days. Then I'll be a non-resident from today. In the case of a foreigner who is residing in abroad and come to Sri Lanka, what will happen? What will happen? Now we'll say Mr. David, a British citizen, he came to Sri Lanka, come to Sri Lanka today. First came to Sri Lanka today. Now in his case, we have to count 365 days from today. But now he came to Sri Lanka, right? And he stay here. Next 1 year, he might leave Sri Lanka or be in Sri Lanka. Now, if his period been in Sri Lanka for more than 183 days ends by a day, we'll say next March, he was waiting in Sri Lanka and 1st of April 26, he leave the country. Then in his case, his residency in Sri Lanka continues the day he ends that period. Now, ultimately, this ends but the unfortunate situation, this conjunction is O. Therefore, as per the law, we have to apply both measurements. This is the other thing. Now, there's a loophole in this. Now, we'll say, first one, I resides in Sri Lanka. My house is in Sri Lanka, but I went abroad. Suddenly, COVID happened. As a result, I couldn't fly back to Sri Lanka. Therefore, I stayed with my child, we'll say in Australia or somewhere. Due to the COVID, I couldn't come back. Now what will happen? I am residing in Sri Lanka, but present in abroad more than 183 days. Now for that period, what will happen? I will become a non-resident for Sri Lanka test. I'll become a non-resident. But unfortunately, this law is so complicated because this conjunction here, 1, 2, 3, 4, 4 conditions, the conjunction is O. It's totally misleading situation. These are errors in laws. Now, this item 3 and 4, it is applicable for special type of people. Item 3 applicable for government officials Now, some of our government employees go abroad to to do their government service. When they are going abroad, they might accompany, their family members also might accompany. Now, in a case like that, this rule we have to apply for him as well as the family members. Now, government official or employee or a spouse is posted abroad. That means you are not going willingly as a result of the employment posted abroad during the year. Then, during the year, there the word is during the year. 183 days is not there in there, during the year. If you leave even 1st of April, you will become a non-resident. If you leave 31st March, again for that year also you will become a non-resident. Right? Or if employed in a ship during the period, the individual is so employed. Now, these ships, these are not boats, ships, fairly big one. Normally, for international laws, ship assumed as part of that country's land, part of the land of that country. Now Sri Lanka ship. What is Sri Lanka ship? Any ship registered with merchant shipping of Sri Lanka, then only that ship can display Sri Lanka flag. For you to display Sri Lanka flag, you have to get registered that ship with Sri Lanka merchant shipping of Sri Lanka. Then once you get that flag license, registration, we consider that ship as part of our land. As a result, even the ship is sailing in international waters, we consider that land, that ship is part of our land. That is why if employed in a ship during the period, the individual is so employed, we considered as resident. I think it is clear. For partnerships, there are some conditions. If formed in Sri Lanka, because partnership, you can't use the word registration or incorporation, because even registration is not proper. Because as per tax law, even without a written document, you can form a partnership. That means there may not be a registration. That's why they have used the word formed in Sri Lanka, or luckily the conjunction is okay, or any of these two. At any time during the year, the management and control of the affairs of the partnership is exercised in Sri Lanka. This may be a partnership formed in abroad, maybe a partnership formed in abroad. But if the management and control of that partnership is happening in Sri Lanka, we consider, for tax purposes, we consider it as a resident partnership for Sri Lanka tax. Next, we'll move to companies. 3 conditions are there. It is incorporated or formed under the Sri Lanka laws. Because under companies, as we notice, the companies mean not only the companies incorporated under the Companies Act of Sri Lanka, but also all associations, body of persons comes under the definition of companies for tax purposes. As a result, they couldn't limit only to the word incorporation. They fix formed also. It is incorporated or formed under the laws of Sri Lanka. Incorporated or formed, then it is registered, or the principal office is in Sri Lanka. Whether it is registered or the principal office is in Sri Lanka. Or conjunction is or. At any time during the year, the management and control, again the management and control, all these 3 that is common, management and control of affairs of the company exercised in Sri Lanka. Then trust also same type of conditions. Are there 3 conditions? Trust, they have not used the word form, not registered, not incorporated. They have used the word, a technical term, established. Trusts are not registered. Basically, to form a trust, to establish, we established a trust, right? If it was established in Sri Lanka, now how to establish a trust? Can somebody help me? How to establish a trust in Sri Lanka? Sri Lanka trusts are not much popular because here the trusts are mainly for charitable purposes, NGO type purposes. But in Western countries, trusts are mainly not for that, mainly for tax planning also. They form trusts to manage the family affairs for various tax benefits and all. Right. How to do that? We use the word establish. To establish a trust, what you have to do is to sign a document called what? Sign a document called what? Can somebody contribute your knowledge? What is the document we use to establish a trust? It is trust deed. It is called as trust deed, right? There's no mandatory requirement of registering, nothing. What you have to do is to sign a document called trust deed. There's no mandatory requirement of registering it. No sooner you sign the trust deed, it is considered as an established trust. How to do this? Prepare a document and sign by trustees. Signed by trustees. To manage a trust, there should be a board called trustees. Then all trusts, there should be beneficiaries. Because we are forming a trust to get the benefit. Then there's a beneficiary or beneficiaries. 2 parties are there. Trustees are the people who are managing it. Beneficiaries are the people who are getting the benefit of that. Then trustees or trustee should sign a document called trust deed. Then it is a trust which is established. It is legal. For all legal purposes, that document is the document, valid document. Right. Then now under trust, what it says, if it was established in Sri Lanka, that means trust deed is signed in Sri Lanka. Then at any time the trustees is resident in Sri Lanka. Anytime the trustee or trustees is resident in Sri Lanka. Anytime the trustee is resident in Sri Lanka, trustee or trustees. Or at any time during the year, Sri Lanka resident person directs the management decision of the trust. Now earlier ones, management and control. Here also the same meaning with different words. Right. Then it is considered as a trust, resident trust for Sri Lanka tax. Are there any questions on this? I'll move on. Yeah, please.
Yeah, just for a practical question, like this trust deed is same as a partnership agreement or something, is it?
Looks like a partnership agreement, but in the case of partnership, which is defined in the Inland Revenue Act, there's a separate meaning. Now, for partnership and trust, there are 2 interpretations. Now, when we take, now see, partnership means, as per section 195, partnership means an association of two or more individuals or corporations carrying on a business jointly for the purpose of making profit. Now, in the case of trust, this motive is not there, no? Generally, in the case of a trust, this motive is not there. Business motive is not there. In a trust, it is more towards asset management, managing of an asset, because the trust definition, it says it is covered some asset. No? Trust means an arrangement under which a trustee holds assets. Now, in trust, what's happening? We are forming a trust to manage, for tax purposes, to manage an asset or assets for the benefit of the trustees. In the case of partnership, we are doing some activities for the purpose of earning, making profit as a business. Therefore, these two are not matching each other, two different things, because there are two different definitions are given in the Inland Revenue Act. You can see some similarities, but because of these different definitions, you can't take one case as a partnership as well as a trust. You can't do that. Is it clear?
Yeah.
That's good. You can ask the question.
Thank you.
So, a small question. Now we have, when it comes to individuals, now we have dual citizenship, right? And as opposed to permanent residency. So my question is, so you are if you're a dual citizen, it's equivalent to permanent residency. First question. Second one is now, so to be defined for tax purposes as a resident, the first point, residence as well as presence is and or.
Yeah. If I'm answering the second part, this is a mistake in our law.
Yeah.
Right. Now, as I mentioned, this current law, there are so many loopholes. Right now, actually, the practical application is O. Right, but now the IRD is trying to say O for all these things, but to me, it shouldn't be O. Right? That means if it is O, comma, at the end it says O, that means by fulfilling any of these things, you become a resident. To me, it is wrong. That is why I said when I was explaining, there's an error in this law. Now, I think this conjunction should be and. Right? Anyway, now law is not much clear. But practically, we take isolatedly, even my permanent residency in Sri Lanka, I took an example during the COVID season. If I have gone abroad and couldn't come back for 1 year, for tax purposes, I had to take that I have lost the Sri Lankan residency for tax purposes. That is how, luckily, that is how the IRD also applied it. But when we see, as you asked this question, when we see the law, lot of ambiguities in that. Law is not clear. That is the answer for the second part. First part, you can't mix the citizency and the residency. Now here the residency is not for, luckily you asked this question, which I have forgotten to explain. I overlooked it. Now keep in mind, in tax law, the residency is nothing to do with immigration and immigration law residency. Immigration and immigration law.
Sorry, no, because this it says permanent residency. So permanent residency is where it is related to immigration law, isn't it?
Yeah, whatever it is, two different meanings. Don't try to get it mixed with the meaning of immigration and immigration law residency with tax residency. Two different things. Now, you may be a overseas citizen. Now, there are a lot of our people who are having dual citizenship, reside in Australia and having dual citizenship with Sri Lanka. Whether you have dual citizenship or you don't have citizenship in Sri Lanka, either case, for tax law, we are applying only these four rules. For tax law, only these four rules. Citizens is nothing to do with tax law. Immigration and immigration purposes, residency is nothing to do with tax law. Totally different. Is it clear? We are checking the passport just to see when you have left the country physically and when you have reached the country physically. Only for that purpose, we are referring the passport, not for any other thing. Understood?
So it's the 183-day rule which is predominant, right?
Yeah. Now, as an example, if I'll go abroad and today I leave the country, come back after 1 month, stay 1 week, again I go, again I come back, again I go, again I come back. From today, I counted another 365 days front till 8th of September 2026 to find I was out of the country for more than 183 days during that year. Then I have become a non-resident from today. That has happened to a lot of clients because they went abroad, they couldn't come on time during the COVID season. Actually, we are using this residency principle as a tax plan also. On my advice, on tax consultant's advice, we have some individuals who are not having tax residency in any country. In most of the country, this 183 days principle is applicable. Most of the countries, right? Now then, I can stay here less than 183 days, go to UK, stay less than 183 days, go to Singapore, stay another couple of days. Then ultimately, I'll not be a resident of any of these countries for tax purposes. Earlier, sometime back, UK had a rule, in addition to this number of days, they had a rule of having immovable property in UK. Sometime back, they had a rule like that. If I have a immovable property in UK, even I live in Sri Lanka for tax purposes, I am a resident for UK, then I'm a resident for Sri Lanka tax also because physically I'm in Sri Lanka. Then they changed that law a couple of years back. Now that law is not there, more or less similar to our law. Now you might ask, what about our people who are working in Middle East? A lot of our people are working in Middle East. As you know, Middle East countries never give citizenship. None of the Middle East countries are giving citizenships to any other person. We are giving citizenships to them, but they never give the citizenships. All our employees who are working in those countries, they can't become citizens. They may be permanent residents. That's true, but not citizens. Now, therefore, don't mix with citizenship for tax purposes. That is not relevant at all. Now, all our employees, almost all our employees who are working in Middle East countries are non-tax residents for Sri Lanka taxation. They are non-residents for Sri Lanka taxation. Because generally they are out of Sri Lanka for more than 183 days. I think it is clear.
Yes.
Now, are there any other questions? I have enough time.
So one more question, but it's we passed that section. When it comes to other income, now agriculture income, not necessarily registered as a business, but there is agriculture income. Let's say you have a piece of coconut
For
land
any
or something.
business, the registration is not mandatory. Yeah. Okay.
So
Yeah, please.
you sell your coconuts and you'll have probably a caretaker. So still you have to work out the net income and record it as a agriculture income. Even in a small scale.
Correct. You are correct. Yeah. Because agriculture is a business. Even small scale, we'll say I have 1 acre coconut land. Per year, what's the income of that? Very negligible income nowadays. Right. But there are certain expenses. Sometimes I have to employ a coconut for harvesting, pickers and collectors and manure, and so some expenses like that. Then from the sale proceed, I can deduct these direct all expenses and arrive the profit. That profit is a taxable profit under our law. The biggest mistake happened in Sri Lanka. We have not recognized, majority of our governments, they have not recognized that we are an agricultural country. We should give concessions for agriculture. This is the biggest mistake which is happening for our country's development. Now in Sri Lanka, now our main two income sources are the agriculture, tourism. Then next, few exports, mainly garment export, where the value addition is very negligible. Because we are depending on almost 98% imported materials. We add only our labor component to that. We can't keep a good profit on that. Because all materials we are importing. Right? Therefore, we can't take this garment sector as a very lucrative sector to the economic in gross domestic production wise. But why we went on this garment industry so many years back, especially during late Mr. Premadasa's time? Why? Seeking for employment and to improve the money circulation of the country. He had those two views. With those two views, to achieve those two only, mainly he introduced this. It worked out. Definitely, those two purposes met. Lot of our people who were in villages got employment. They were underemployed or underutilized their capacities. They were just waiting in these shops and all without doing anything. And lot of young generation, they got employment. That is fulfilled. Second thing, he thought that better to improve the money circulation. Improving the money circulation is very much required for a country's development. That also happens. When these girls go for work, they earn some income. We'll say 40,000 rupees a month. maybe small, but when they get earlier, they were not earning anything. Now they are getting 40,000 rupees. Then they buy various items. They go and buy the dresses and telephone. They upload the telephone. They load reloads and all. They go here and there. They go on trips and all. They buy various things. With that, what's happening? Increase in the money circulation. Those two ideas met. Definitely, no doubt about that. But in foreign currency wise, it's not a very lucrative thing. But in Sri Lanka, we have to concentrate the agriculture, that is the base. Agriculture is the base. We should support the agriculture, but unfortunately, majority of the governments or the politicians, they can't understand the importance of that. Unfortunately, the current situation is also same. As usual, it's same. And as a result, what's happening? The money circulation has come down. And it is a stagnated country. For years now, our country is a stagnated economy. We have a stagnated economy, right? We can't expect much development with just stagnated economy. Now, to your question, as you said, even as you asked, even for a small operation, it is for taxation, it is a business operation. Agriculture is a business operation. Therefore, anyway, even the profit is small, or even you end up with a loss, you have to calculate that profit or loss and declare for tax purposes. Luckily, in most of the other countries, in most of the countries, they don't tax that type of income. They recognize the natural resources and identify that country, and they don't tax that field. If it is a country where they get a lot of iron resources or coal resources, sometimes they give promotions to that sector. Now, then, when they are taxing, yes, anybody has to prepare some type of account and identify the profit and see whether that person is liable to tax or not, right? For that, that may be a complicated thing, an unnecessary thing. When we are trying to catch all these small people for taxation, our tax administrators, generally they can't identify the priorities. As a result, they waste a lot of time to administrate these small taxpayers instead of catch holding the people whom they should catch hold. It's not happening. Now, anyway, if I'll come back to the question, agriculture is a separate income source, which is taxable in Sri Lanka. Right. Now, next step, we'll move to tax computation format. Now, when we are learning the income tax, the computation of tax, because ultimately we have to pay the tax. To pay the tax, we should know how to compute tax. Therefore, I prepared a format which anybody can apply for the tax computation. Any taxpayer, whether that taxpayer is an individual, partnership, trust, or a company, can apply this format, right? Now we'll see this format. Now, as we learn, there are 4 sources of income: employment, business, investment and other. Then total. When we add these four, we get the total. Now in taxation, earlier as we defined in section 2, 3 and 4, we had to start with assessable income. Assessable income from each source. We should know what's the assessable income from employment, what's the accessible income from business, what's the accessible income from investment, what's the accessible income from other sources. Then once we add these four, we get total. To arrive this accessible income, because tax law starts from accessible income. Starting point of the tax law is accessible income. To arrive this accessible income, now we have to match this with accounting terms. Now majority of us being accountants, what we do? We prepare various type of accounts. We have knowledge in preparation of accounts. Right. As a result, we should know the link between accounted profit and the accessible income. Right. We are preparing some type of day books or double entry books or whatever it is and prepare some accounts. As we are preparing some accounts, at the end we arrive at profit or loss. Then we should be in a position to match that accounting profit with the tax profit. Because for taxation, we have to start with accessible income. To start with accessible income, anyway, we have to start with accounted profit or loss. Now here, the first part is that exercise. We identify the normal income, business profit, employment gross income, investment gross income, or other gross income. We have to do some adjustments to that to arrive the accessible income. One is exempt income. If there are any exempt income, we from employment income, we deduct the exempt income. In all these sources of income, there are certain exempted income. As an example, for employment income, government servants' vehicle permit. Now, of course, these days, there's no value. Earlier, secretary level people, they were selling their permit for about 25 million rupees. Other normal government employees, they were selling their permits for 1 or 2 million rupees, or maybe less than that. It is specifically exempted under the Inland Revenue Act. Then government servants, any employees, EPF is exempted from tax. Now that type of exempt income we have to deduct from the gross income. Then in the case of business also, there are certain exemptions. Nowadays, of course, hardly any, only very few. Then investment income, there are few exemptions, very few exemptions. Then other sources. Other sources also, there may be exemptions. Therefore, if there are any exemptions, we have to remove those things. Then if there are any income which is subjected to final withholding tax, we have to deduct those also. Now, as an example, dividend income, on dividend income, there's a 15% final tax. Once, if the dividend income is subjected to 15%, this gross dividend also includes in this accounted profit. Therefore, from that, we have to deduct the dividend income because it is subjected to final withholding tax. Like business also, there may be certain income, final withholding tax. Like in gem mining business, once you pay 2.5% gem mining levy to the National Gem and Jewelry Authority, that income is tax-free. You have to remove that then. Even other income, there may be certain things. Therefore, you can deduct those things. Then specific exclusions. Under the tax law, there are few places which says you need not to tax this. Those items also you have to deduct. That is applicable only for employment, business, and investment, not for others. Then specially allowable amounts, there are certain things, double deductions and all, specially allowables, those things also we can deduct. Then allowable losses, if there are any allowable losses, we have to deduct those things also. And by deducting those things, then there may be certain expenses, which are not allowable, like entertainment expenses. You have to add back those things. That is applicable only for business and investment categories. You have to add back certain things. Under Section 10, there are certain disallowable items. You add back that. Then we are getting accessible income from these allowable losses also we deducted. Then we got accessible income from employment, accessible income from business, accessible income from investment, accessible income from others. Then once you add all these things, the total accessible income. Now, tax law starts from this point. We have 4 sources of accessible income and the summation of that, total of that. Once you get the accessible income, next step, from accessible income, we have to arrive the taxable income. Because we have to apply the tax rates on the accessible income. Therefore, you have to arrive the taxable income. As we heard earlier, to arrive the taxable income from accessible income, starting with accessible income and ending by taxable income, there are 2 deductions. One is qualifying payments, the other one is relief. As I mentioned, relief is there only for individuals, and qualifying payments are there for all taxpayers, depending on type of the qualifying payment. Right. I'll briefly explain these things in detail. I have given these things in the note, right, in the paragraph 152, right. Donations by any person to approved charities. Now, any person, when they donate money to approved charities or goods to approved charities, subject to an upper limit, you are getting qualifying payments. Now, in the case of individuals, donation to approved charities, when individuals donate money to approved charities, the upper limit is 1/3 of the accessible income, 1/3 of the accessible income, subject to an upper limit of 75,000. Right? There the upper limit is 75,000. No more deductions on that, right? 75,000 upper limit. Then if we'll take the donations by a entity, company to a approved charity, upper limit is 1/5 of the accessible income, subject to 500,000 rupees. I have given these details here. I'm sorry that I have mentioned as accessible income. It is not accessible income. It is taxable income, right? Now, the other specialty, you are trying to calculate taxable income. But to calculate taxable income, you have to apply this 1/3 or 1/5 formula on the taxable income. How to do that? You have to do a max formula. You have to apply a max formula, right? In the case of individuals, it is 1/3 of the taxable income or 75,000, whichever is lower. In the case of a company, 1/5 of the taxable income. Taxable income is at the bottom, but you have to apply that. Taxable income subject to 500,000 rupees per annum. If it is a donation to the government, no upper limit. Why? If you pay tax, you are paying either 30% or 36%. In the case of the individual, 36% maximum. If you give a donation to the government, 100% goes to the government. Therefore, there shouldn't be upper limits. There's no reason to have an upper limit. Right? That is why no upper limit. Any sum remitted to consolidated or president fund by corporations, this is applicable only for corporation, without any upper limit, you can claim it. Any sum, that means no upper limit. Next, contribution to establish Samurdhi family shops of a lady by resident individual. This category is there only for resident individuals. No upper limit, no limit. Now, if I want to help other people, if I have money or something to be given to poor people, if while giving this donation, if I want to get a tax benefit also, this is one of the wise area. I can go and find a Samurdhi, search for a Samurdhi family and select a lady of a Samurdhi family, not the gents, lady of a Samurdhi family. And I help her to do a shop, start or run a shop. How can I help? I can give some money for her to start or run a shop. Or I can give some materials for her to use for a shop. But the term shop is not defined in the tax law. The word shop. Now there's a word shop. This shop, the term shop is not defined in the tax law. Now, when it is not defined in the tax law, any shop may be a shop. Even a tailor shop is a shop then. Nothing to worry. You can donate any money. It is without upper limit, you can enjoy this benefit. But how to prove this? Now, we are dealing with IRD, Inland Revenue Department. Therefore, when you are donating, you have to go through the Grama Niladhari and get it certified by divisional secretary. Otherwise, you won't get this benefit. Our IRD won't accept it. Right? You have to go through the Grama Niladhari and the divisional secretary. Okay? This is applicable only for resident individuals. Next, film production or cinema construction, equipping, upgrading costs. Costs, what you are actually in Sri Lanka with these televisions, we started losing the cinema industry. We are losing the cinema industry. And as a result, government identified this some time back, even under the previous law it was there, and they thought of helping cinema industry. To help them, they introduced this. If you are spending some cost to produce a cinema or to construct a cinema hall or to equip in a cinema hall or to upgrade the existing cinema hall, then by any person, maybe individual or any other entity, subject to some upper limits, they can claim it for qualifying payment. Upper limits, we will discuss that under the detailed note. Then financial institutions, acquisition and merger costs. Now, in Sri Lanka, in a bad economic situation, we are in a very bad economic situation because money circulation is so low, heavy taxes in Asian region, one of the most heaviest tax country. As a result, when the government collecting money, more and more money as tax, the spending ability of the general public curtail. And if the government is not spending this money for the development projects, economy is stagnating. Now we are in a situation like that. Total economy is in a stagnated situation. People are not in a position to spend the way they want because they have to pay heavy taxes. Right? Ultimately, the economy is limited. In a decreasing economy, the most profitable institutions are the bankers. You all can see that with share market. The bankers are making good profit, and as a result, all bankers' shares are rapidly increasing. People feel that that is the best investment. But when it goes up to a level, all these financial institutions are in a bad wicket, at a risk. After recognizing this unseen risk, right, government introduced this. Government wanted to promote banking institutions, financial institutions to get merged together and make themselves a bigger entities. For that, they introduced this section. In merging of companies, there's a huge cost. Then they allow that huge cost. Majority of this cost may be capital nature. When it is capital nature, it may not be allowable under section 11. May not be allowable under section 11. Therefore, to facilitate this financial institution to go for mergers, they gave this concession. They said, whether even it is capital nature or revenue nature, no problem. The entire cost you are allowed to set off against the revenue within 3 years, 1/3 per annum. Okay. Those are the qualifying payments. Next, reliefs. Reliefs applicable only for individuals. There are only very few reliefs available now. Personal allowance. Now the personal allowance is 1.8 billion. Once it was 3 million, they reduced it to 1.2 million. Again, they increased it to 1.8 million. Now it is 1.8 million. This is open for any Sri Lanka resident, whether you are a citizen or otherwise. Whether you are a citizen or otherwise, for any Sri Lanka citizen, any Sri Lanka resident, tax resident, you get this. That means even foreigners who are living in Sri Lanka more than 183 days, they enjoy this 1.8 million allowance. And any Sri Lankan citizens. Now, some of our children may be living abroad. If they are maintaining the dual citizenship, they are Sri Lanka citizens also. They are non-resident for Sri Lanka tax, but they can enjoy this. Okay? They can enjoy this. Then 25% repair allowance on rent. 25% repair allowance on rent. That is, if an individual is having a rent income, on that rent income, either you can claim actual repair expenses. This is only for repair. Actual repair expenses or 25% of the rent as deemed repair expenditure. One is a deemed one, the other one is actual. You can select either one, which is beneficial to you. In 1 year, your actual repair may be very big amount, maybe 50% of your gross rent. In that year, you better claim the actual amount as repair. In another year, your actual repair may be negligible, 5%. That year, you better claim this 25% deemed repair allowance. Keep in mind, this repair is over and above all direct expenses. Now, to arrive the taxable income from rent, independently you are deducting the actual repair or 25% allowance, whatever is higher. In addition to that, you are claiming all other related expenses such as rates, advertising, broker charges, and all. All those are independent. Not even those things, but also even if there's an interest cost on purchase of that property, you can deduct that also. Okay? Now, some people, they have misunderstood this. Therefore, that is why I explained it again and again. All other directly related expenses plus repair expenses, optional repair expenses you can claim. Option mean two options are there, either 25% of the gross rent, or actual repair. Of those two, you select one. Then, next, expenditure. Earlier, there was an expenditure relief. Now it is not there. It was there only up to 31st December 2022. It was there only up to 31st December 2022. Now, this was there only for resident individuals. Now it is not there. Then the next one, on solar panel costs. Law says solar panel cost. On your any premises roof, if you'll fix solar panel on your premises roof and given the supply to national grid, that is grid connected solar, you are getting this allowance. Keep in mind, off-grid connections are not qualified for this. Off-grid connections are not qualified. At the same time, keep in mind, this is open not only for resident roof, but also even commercial building roofs are qualified for this. Okay? This is available only for individuals. Now, if the actual expenditure is 2 million, we'll say actual expenditure this year, 25-26, I incurred 2 million. 25-26, I claim 6 lakhs. Next year, I claim 6 lakhs. Next year, I claim 6 lakhs. In the fourth year, I claim the balance 2 lakhs. That is how I can claim. Okay. The law, there's an error. Law says solar panel. Right? Keep in mind, there's an error in the law. The entire solar system cost is allowed. Entire system cost is allowed. Because in the case of solar, you need solar panels. Nowadays, solar panels are really cheap. Once it went up to about 75,000 rupees a panel. About 600 watt panel, it went up to about 600,000, 60,000, 75,000. Now it's only about 20,000. Then you need an inverter. If it is 20 kilowatt inverter, it may cost about 6-7 lakhs. Then you need a switchboard. Then you need wiring system and the structure. Now all these are costly. Generally, it costs, when it comes to a 20 kilowatts system, it might cost you about 2.5 million rupees. Right? Then once you fixed it, and whatever it is, fixed and connected to the national grid, you can claim 600, the cost of doing that, 600,000 rupees a year. If you'll obtain a bank loan and do that, the own capital investment, we'll say it was cost 22 million. In the first year, I obtained 20 million, 2 million, 2.2 million, the total cost. I put my own money, 2 lakhs, and obtain a bank loan of 2 million. Now, in that year, that 2 lakhs which I spent on my pocket, I can claim in the first year. In addition to that, I can claim the capital repayment during the first year. But once you total up these two together, in a year, the total amount should not be greater than 6 lakhs. If it is greater than 6 lakhs, the balance unclaimed amount, you can carry forward and claim it later. Okay. Then the next question, when we supply the solar, whether the solar income what we are receiving from CEB, whether it is a taxable income or not. Yes, that business income is taxable. You have to calculate a separate account and see the business income. The business income is taxable. It is taxable.
So how are we going to compute that?
No, you have to calculate now the net metering or net account, whatever it is, you have to take the gross amount, gross total units what we have sold at the gross income.
So only the sold amount.
Consumption. Before deducting your consumption. Now we'll say you supplied 100 units, you consumed 40 units. You have to calculate this income on 100. You know the rate. On that rate, you calculate the gross income. From that gross income, you deduct the maintenance cost, depreciation, capital allowances. System, you can depreciate. Capital allowances, if you have obtained a bank loan, bank interest, maintenance cost, all these things you can deduct and arrive that year's profit. On that year's profit, you have to go and include here. Under business income. Under business income, that should be here.
So excuse me.
Yeah.
Now
yeah.
we are claiming the 600,000 under reliefs. Can we again deduct this capital allowance as well?
Yeah. 600,000 is a relief, no? That's a separate thing. That is nothing, that's an independent thing. Nothing to do with calculation of assessable income from business. You have to calculate the assessable income from electricity supply business separately. In calculating the assessable income from electricity supply business, you are permitted to deduct interest cost, maintenance cost, or whatever the other related cost, and even capital allowances. Now that profit we have included here. That profit we have included under business here. Right? After doing that, we arrive the total assessable income. Then we are to arrive the taxable income. To arrive the taxable income, we are deducting a special allowance called relief. Understood?
Yes, sir.
Then once you are, now after deducting all these things, we are arriving the taxable income. Once we arrive the taxable income, we have to apply the tax rates given in the first schedule to the Inland Revenue Act rate or rates and arrive the tax amount. Once we arrive the tax amount, on that, the tax amount, from the tax amount, now we arrive the gross tax for the year. Once we arrive the gross tax for the year, from the gross tax, what we do, we deduct the tax credit, permitted tax credit. It may be foreign tax credit or local tax credit. You are getting the permitted foreign tax credit only if you have included that overseas income in calculation of Sri Lanka tax. Otherwise, you can't deduct the overseas tax credit. If you have already included that for the calculation of Sri Lanka tax years, you are allowed up to the permitted level. Proportionately, you have to calculate. That amount you can deduct then the local tax credit, the permitted local tax credit, you can deduct. As an example, tax credit on dividend tax, you can't deduct here because we have already removed the dividend income from the assessable income. Already removed it. As a result, the final withholding tax amounts you can't deduct here. Right. Once you deduct these two types of tax credit, you are getting the balance tax payable or maybe overpayment. If there's a overpayment, if there's a balance payable, you have to pay on or before 30th September. Maybe you have quarterly payments, then deduct the quarterly payments also. Under this local tax credit, you can deduct the quarterly payments also, or withholding taxes and all. Then if there's any balance to be paid, you have to pay on or before 30th September. If there's any overpayment, you have to claim that future, but 60% of your overpayment you can claim in the subsequent year without audits. Right. Are there any questions?
Excuse me, I need two clarifications. One about personal allowance. So you said the personal allowance for is available for both residents and Sri Lankan citizens only. What about if a Sri Lankan citizen is not a resident? So in such a case, how he can claim personal allowance?
Now here what it says is and, not or. That means even you are now a lot of our family children may be abroad. They might come once a year, see us and go. Now, in their cases, as far as they are maintaining the Sri Lankan citizenship, dual citizenship, then they can claim this 1.8 million. No problem, they can claim the 1.8 million. Understood? But suppose we'll say my child is in Singapore. In Singapore, they are not giving dual citizenship. Then if he'll take the Singapore citizenship, definitely he has lost the Sri Lankan citizenship. Then he can't claim this. Okay. The conjunction is and. Conjunction is and. I'll bold it. Is it clear to you?
Yeah, thanks for the explanation. But okay, if it is and, for example, if a person is resident in Australia but a citizen in Sri Lanka as well, in such a case, if he does not have any income from Sri Lanka, but all the income from Australia, so can he claim for this personal allowance?
No, there's nothing to claim in Sri Lanka, no, then, because if he is not having any income in Sri Lanka, he is not liable to tax in Sri Lanka. In a case like that, Sri Lankan personal allowance is useless to him. Then what we should do? Sorry?
But a resident in Sri Lanka but has only income in Australia. I think what he says is that.
Then he can claim. If he is a tax resident in Sri Lanka and the sole income is from Australia, then he has to pay tax in Sri Lanka. Therefore, he has to calculate Sri Lanka tax. To calculate Sri Lanka tax, he has to start with Australian income. And nowadays it is 15%, overseas income is taxing at 15%. Apply 15% tax. Before applying 15% tax, he can deduct this 1.8 million to arrive the taxable income. Okay?
Yeah.
He can deduct. Anyway, for better understanding, I just put stroke and O also. One of these two fulfill, you get the deduction. Any one of. Either you are a resident for tax or you are a citizen of Sri Lanka. I think that is better. This presentation is better. And O.
So just a bit more on that, just to get clarified.
Yeah.
Yes, sir. If there is an Australian citizen, right? He comes to Sri Lanka and wait here for more than 6 months. Then he automatically becomes a resident here. Even in that scenario, he is not entitled for this.
No, no, he's entitled because he's a resident, no then?
But
Resident means tax resident.
non-residents, non-citizen.
No problem.
No
No problem. Now, I'll put the word tax also here. Now, lot of foreign employees are working in Sri Lanka in these BOA companies and all. Some foreigners are working, no. When they are working in Sri Lanka, during the first 6 months, we are considering them as non-residents. Just more sooner they complete 6 months, we applying the normal tax rates, normal pay table, APIT table, which is for residents, because they become resident for tax. That is how we do.
You mean residents including non-citizens, no?
Yeah, non-citizen, but Sri Lanka resident for tax.
No, here it says citizens only, that's why I got confused.
Are there any other questions?
Yes, there's another question. This is regarding solar panel. As you said, it's not a panel, it's a full system, of course, yes. But you said it's only for resident individuals. But in the explanation, you mentioned that even solar panel fixed on companies can be claimed as as a relief.
No. For companies, you can't. What I said is, this all reliefs are only for individuals, right? All type of reliefs. Now, reliefs heading itself, I have mentioned individuals. When I was explaining what I said is, for individuals may be having 2 types of buildings. Certain buildings may be residence, houses. Certain buildings may be commercial buildings. Suppose I have my resident house. On my house roof, I fix solar panels. I'm qualified for that. Suppose in addition to my resident house, resident building premises, I have a commercial building to run my office, we'll say. I have a commercial building to run my office. I can go and fix solar panels in my commercial building also. Still, I get solar panel benefit on that. But ultimately, per annum, both together, only 600,000 rupees per annum. Balance you can carry forward and claim in future. Is it clear?
Yeah, it is very much clear. But in the example that you have given, if you fix solar panel in your office, so capital claim can be claimed by you or the company.
No, the building owner only can claim it. Because in Sri Lanka, this solar connection is given only to the building owner. With CEB, you can sign the agreement only by the building owner. That is why some people, they go and negotiate with the building owner. Now, a lot of companies, they go and negotiate with building owning companies to do a separate joint venture business of producing electricity. Now, especially these tea factory, garment factories, and some factories, they have done that. Now, I don't have a factory building. I go and negotiate with the owner of a factory building to use their roof for me to fix solar panel. But the solar connection agreement signing in between that building owner and the CEP. In addition to that, I have a joint venture agreement with solar as a building owner to do a business of producing electricity. Then in that case, business belongs to separate business is there. One business is the building owner with the CEP. Another business is a joint venture thing. Then with the when we combine these two together, we prepare a business account for the solar panel thing. Then real owner of that is the building owner. Then in that, For the operator, I have a joint venture agreement with him as the operator. I say 80% of the gross collection I need. Then in that business account, he can record 80% of the gross income as a royalty fee payment or capital investment payment, so and so, as an expenditure. Then in his business, that 80% is an expenditure. Then he is paying lesser tax because profit is less. For me, that 80% is the income for myself. For that, I had to prepare a separate account. To finance that, I may have obtained a bank loan. Then I can deduct the bank loan interest or whatever the admin cost on that part and arrive the actual tax liability, taxable income on my hand, investor's hand. Is it clear?
Yeah, it is very much clear. Other than that, this owner can claim relief and capital allowances as well, isn't it?
Correct. Yeah.
It's a
Because
nice,
relief under relief,
yeah.
capital allowances before arriving the assessable income.
It's a very nice business architecture. Yeah.
Yeah. As you said, yeah, it's a good thing. Yeah. In certain countries, government bear sometimes 50% of the capital cost as a subsidy. Certain countries, they are doing like that. Australia and certain Western countries also doing that. Sri Lanka, that is not there. Sri Lanka, actually, we are blocking. Government is blocking as much as possible because now solar system, earlier they were paying 27 rupees, they reduce it to 19 rupees without any reason. CB is buying sometimes electricity at 65 rupees a unit. They were paying 27 rupees to solar people. Solar, this domestic solar, roof solar. Suddenly they reduce it to 19 rupees to cover up their losses, inefficiency losses. Losses happen on inefficiency. Rather than increasing the efficiency, they pass on their losses to these innocent providers. Are there any other questions?
One last request.
Yeah.
Can you please share the document that you have edited right now? Because what we have is before
Right. I'll be sharing this after a couple of days.
Right.
I'll be keep on changing these things, small improvements. Then I will share it at the end. That's good.
Right.
Yeah.
Thanks a lot.
I think the time is now 9:28. I wanted to stop at 9:15 at least, but I went up to almost 9:30. I will stop at this point. Next Thursday, I will continue from this point. Right? Please come with more and more questions on that day. I'm so happy with some people asking questions because it clarifies, it